Hi, I'm MJ from Lioness Publications, and we're just going to do a short session this evening on the U.S. economy, specifically for 2026. And what we're going to use here is the output of a proprietary software that I created about 25 years ago. And the output is called a risk yield chart. And I created this software to actually be able to look at companies, at people, at corporations, at countries, and get a sort of quick idea over a year whether they're going to have high points or low points. I actually used to use it in the stock market because if a company chart actually had really high points here, then I go back and I check the original astrological chart and then see whether, okay, is this something I really want to invest in? And a lot of times I was able to actually spot companies that were going to be bought out, usually before it happened, because I'd be doing this typically about a year, 2 years out. And I do a whole pile, maybe about, 2 or 3,000 of these charts on companies. So it's pretty accurate, but again, there are some details that are missing from it. It's in fact unbiased because it's software. It does the same thing to each and every astrological pattern that it sees. So it's not like I add my input to it. So let's start taking a look at it and see what it tells us about the 2026 economy for the United States. First off, let me explain how to read the graph. Well, we have the left axis, which is identified as either yield, which is above the 0 point. We have risk, which is below the 0 point. As you would probably understand, yield is good, risk is not so good. Risk is more challenging. So it's not like you can't make something of it, but it's challenging. So you'd need to put in more work than you would probably expect to. Versus when you're in yield territory, typically it ends up being much easier to get things done. Now we have a 0 line in effect, and then anything above that line is in yield. Anything below the line is in risk. Now you can have a country have both, a person, corporation, have both risk and yield at the same time, but they have differing amounts of it. And that's how you identify, in effect, whether something is going to be an easier year, a difficult year, a year that has potential. So let's take a look at some specifics in the United States chart. And again, this is for 2026. What happens is the beginning of the year seems like it starts off with a little bit more blue. And that slowly comes down the graph towards the 0 line. But at the same time, we're starting to increase in the risk area. And by the way, we have two different types of risk here. We have transient versus core, and the same thing for yield. For an example, core is something that tends to last for a while. So some event, something that happens that doesn't just go away after a week. Versus transient is something that peaks very quickly and goes away very quickly. For example, in a corporation chart, a transient type of activity would be an earnings report coming out. If it's a good earnings report, you'd probably see a spike in the transient, which is, in fact, would be the light blue. If it was a challenging earnings report, you'd see a valley, which would be like the light pink. Now, the core, in effect, typically if you have a good earnings report, you might see later in that company's year that they actually start trending more into yield. Because that money, in effect, is going to be put to use. So if they're making more money, they might hire more employees to get even more money. Or they might put out new projects. So in effect, that becomes a long-term or core. So let's go back to the United States chart. Right at the beginning of the year, we do have a little bit of a movement in the yield, but then it moves right down into risk. And it comes down and it becomes a valley at about the 4-1 point. So that's at the bottom of the valley. Now, in some cases, you'll have, company, corporation, or person You'll hit a valley and you'll pop right back up into the yield. Sometimes, though, you don't even get there. You should have come back down and do another valley, sometimes maybe even a third or fourth. It depends. Everyone's charts will be different. Depends on what's going on in that cycle for that person. In this case, the United States doesn't really get back up into the yield. So we don't have a lot of yield coming in, not enough to offset the risk. So what does that mean for first few months of next year? Difficult. Challenging. Now, after it comes up a little bit, it comes back down again. So around 6:15, it hits another valley. And then after that, then it slowly comes up. And it slowly comes back up. And then you'll see the yield start increasing a bit. But it still seems like it's about equal. But this says the beginning of the year is probably going to be difficult. Maybe the end of the year will be okay economically, or from just a viewpoint of the people of the United States. Now, when you look at the end of next year, though, what you see is that you do run into risk again. And this is happening right after the elections. So it could indicate that there's some concern about the elections, that it's moving right back into yield. But we do have a transient, running right back into risk. But we do have a nice little transient peak there. So it looks like, okay, so we've got the peak, but then we're moving back. So we'll have to see what's happening next year to get a better idea of this. So overall, relatively simple to read. In fact, some of my clients can read these charts better than I can at this point. Hope you enjoyed this and have a great evening. Bye now.